Hi everyone, welcome back to another edition of In the Black with our resident expert, Ken Mann from Freedom Financial Solutions, as we talk about ways to improve your bottom line and make your business more profitable. We are talking about different ways of doing that in different aspects of your business, whether it be marketing. We're now talking about production and the 9 principles, and we're up to principle number 5, which is improving the internal process.
Right. So again, the production aspect of a business deals with what's going on inside the business. And we have to always be looking for ways to continually analyze and improve our processes.
Well, how do you do that?
Well, it's a process of continuous improvement. So every single thing that you do, you need to ask yourself, is there a better way for me to blah, 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 right? And so look at every process, every interaction, and look, is there a better way to do what I'm currently doing today?
Okay.
So there's actually, people need to consider that you have customers. Every person who touches your product throughout the process has a customer. So even if all I'm doing is putting widget A into widget B and then hand it off to you so you can put widget C and widget D together, you're still my customer.
Okay.
Right? And then you take that process and you pass it on to someone else. And eventually you have an end product or an end service that goes to your real customer. But everyone needs to look at their process as if I have a customer that I am delivering something to.
Right. And I think it's a great point that you make, because for smaller businesses, maybe not so much, but mid-sized businesses, accounting doesn't talk to marketing, and marketing doesn't talk to production. And it's almost like they're in their own little silos. And what you're saying is, in order to work effectively as a team, you really need to look at across the aisle and say, that's my customer.
Yeah. So even the sales guy who is out there selling products needs to realize that he has to work with the people in production to make sure they can deliver the product that he or she is out there selling.
Right.
And so the process has to be communicating together, and all those areas of marketing, accounting, and production all have to be communicating with each other. So the way that people are continually analyzing the process is really, it's a 5-step process. One is you have to identify the problem, right? That should be the easy step. There's a problem, you identify it. Then you get together and you actually brainstorm solutions for the problem. And if you're just doing it by yourself, it's going to be kind of a small brainstorm session, but if you have multiple people who are involved, if you have employees, or even if you have subcontractors or even vendors, include them all in the process of brainstorming. We had an example in our own business this last tax season. We had a problem we were having for years, and I always thought there was just no way to fix it. And so this year I just tried mentioning it to one of my employees, and then ended up having a conversation where all the employees got involved, and we ended up finding a solution that really improved our process and reduced a certain error by over 90%. So it really works even when you think it's not going to work. So we put this into practice for ourselves. Then you need to actually quantify the cost of making that change, and the revenue that you think that change is going to provide. So sometimes you may look at a solution and find out that it actually costs you more than what the savings are going to be. You got to scrap that one and look at a different one. So it's not just because you come up with an idea, it's always going to be the right one. Right. You need to really evaluate what's going to cost you to implement it and what the potential income you're going to generate from it. And then after you've decided, you actually have to make the change.
Yeah, right.
And then when you're done, you want to measure the results. And if the results match what you were expecting, then it was a good change. If the results didn't give you what you expected, circle back around and start with the brainstorming all over again and try and come up with another solution that's going to bring the results that you're looking for.
Yeah, and sometimes, it's going back to the process, starting at the beginning. The root cause analysis is really important, and you have to really sometimes drill down to find out what the actual root cause is. But once you get that, that's the magic thing that can change everything, because once you've identified it, then you know what you need to fix.
Yep.
But sometimes you get distracted by something else that's happening in the process that might not be the actual root cause, just a byproduct of why things are bad.
Yep.
Right? Okay, so now my question is, how does accounting come into all of this?
Well, accounting actually is a reporting aspect of the business, right? So your accounting system has historical data about what's going on in your business, and so as you're analyzing the costs and the potential revenue, your accounting system should have information there to help you to do that. You can also break your business down down into more logical chunks. So like, for example, if you sell 3 products and your profit and loss only has sales on it, you have really no information about what's going on in your business other than you're making sales. But if you instead break that down to sales of product 1, sales of product 2, sales of product 3, now you have that much more information about your business than you did just if you just tracked sales, for example. So you can take those, we call them cost centers or profit centers, and you can put them into your QuickBooks or whatever accounting system that you're using and get more information about your business. And you can also do that with the expenses that go against delivering that product or service that you might have. So accounting is going to give you a tremendous amount of information, and it's relatively inexpensive to get it. All it takes is putting a little bit of effort into the data that you're putting into your accounting system to get all this wisdom and knowledge out of it.
Can someone who doesn't have an accountant that does their own QuickBooks, does their own books, does their own thing, can they figure this stuff out?
Yeah, they can. Or you know, you hire a QuickBooks Pro advisor or an accountant for an hour or 2 hours of consulting, and they help you set what's called the chart of accounts, which runs the information inside of your accounting system, and then they can teach you how you can continue to do your own books. So maybe for $150, $300 investment, you can get that insight and then still manage to run your own books after that and have all that information that's going to help you with this process.
Well, we talked a lot about the process, and in this short 4 or 5 minutes, we want to let you know it doesn't really happen overnight, right?
No, it doesn't happen overnight. And I think the last step that people have to take into account is what we call benchmarking. So there's a lot of financial information out there that says if you are in the bakery business, this is what your percentages should look like between cost of goods sold, what you pay for advertising and rent and other things. And then you can look at your numbers and compare them against those numbers and find out if your numbers are in line with theirs. And there may be discrepancies that just happen because we're in New York and other people are in Missouri and the costs are different there. Or there might be other things where you just realize, holy cow, I'm really out of whack on how much I'm spending in this category. Let me now use this continuous improvement process to figure out why my costs in that category are so much worse than everyone else in the industry.
So when you talk about a comparative report based on your industry, let's say there's a guy who has a landscaping business, where can he go to find out what comparable prices?
Often there are industry-specific organizations that would have that information. There's also other groups that just take these financials from across all aspects of businesses and then provide that information. Some of it you can get for free with some smart Google searches. Some of it you may have to pay a nominal fee for. But if you can get that information and save you hundreds of thousands of dollars in your business, and it costs you $100, $200 to get it, and you save $2,000 back, it's a really good investment that you should consider.
Yeah.
But if you're not comparing and always looking at how to improve your business, you're going to get the same results that you're continually getting now.
Yeah, right. And that's why Ken Mann is our resident expert. Ken Mann of Freedom Financial Solutions. In the Black is the series where we're going through 9 principles. We'll go to the 6th principle next time, is how to take what you have and make it better. And we hope that you're getting a lot of great information out of these segments, and we will see you next time.